Welcome back to Alpha Recap, your end-of-day wrap from stockalpha.ai. Markets closed and we've got a lot to unpack from a pretty eventful session. As always, if you have questions, you can reach us at stockalpha.ai and use the Q&A feature. So, what really stands out here is big governance and policy moves driving price action today.
Yeah, absolutely. Big day. We had one shocker that basically set the tone. A CEO exit tied to a major customer dispute, and the stock just sold off hard. We'll get to that first.
Right. Verra Mobility disclosed their CEO left after they received a termination notice from a big customer, Avis Budget Group. The market reaction was dramatic. The stock dropped about $9.23, or roughly 70%. That was the single most market-moving story of the session.
Honestly, I was a bit surprised by this one. When you've got a major contract at risk and leadership turnover at the same time, investors tend to hit the exit button fast. This isn't just a share price move. It's a governance and liquidity story.
Contract risk plus execution uncertainty equals immediate downside pressure. And to be clear, data suggests this could affect near-term cash flows and raise governance scrutiny for a while. So the next things to watch are any follow-up company filings, 8Ks, and whether Avis puts out a public response.
Right. And on the governance front, Coca-Cola filed a Form 144 showing planned insider dispositions, roughly 27%, about 13%, and about 0.2% in different filings. That doesn't mean shares were sold today, but Form 144s increase the chance of volatility if those insiders do execute.
Exactly. Analysts note that Form 144s are signals to monitor for subsequent Form 4s, which would confirm actual transactions. So keep an eye on those filings for confirmation. Quick reactions.
Big governance day.
Not what anyone expected.
Totally.
Moving on. Another major theme was policy reshaping supply chains, especially for critical minerals. The Pentagon's planned ban on Chinese-origin heavy rare earths in 2027 is accelerating procurement and favoring Western metallization capacity.
Yeah, and that policy shift gives incumbents that already control metallization systems a strategic edge. Companies that process heavy rare earths, smaller cap industrials, could see multi-year tailwinds if procurement timelines and contract awards line up.
Analysts note the mechanics here. Policy plus procurement tends to lock capacity and create long lead times for alternatives. So when governments pivot supply chains, it reshapes capital spending across defense and industrial equipment makers.
And on the utility side, American Water used an industry conference to highlight cross-sector resilience between power and water. That's more of a regulatory and CapEx theme. Resilient spending can show up in rate cases and long-term CapEx, which matters for regulated utilities.
Right, so the watch list here. Any Pentagon procurement timelines or contract awards tied to that 2027 ban, and rate case filings or commentary from utilities about resilience-driven spending.
Short reaction? Policy is moving markets.
Yeah, that tracks.
Okay, now the AI and semiconductor beat. This was cross-sector and pretty coordinated. Platform product moves, tooling commercialization, and analyst upgrades all pointed to AI momentum.
We saw Meta expand creator tools and AI translation features aimed at boosting engagement, which is a future monetization play. Covalent announced a wafer-level characterization workflow with Oxford Instruments. That's a near-term commercialization step for semiconductor test and characterization. And Hanshao launched an AI-powered store assistant in partnership with Microsoft, which is enterprise-scale retail AI.
And importantly, Deutsche Bank raised its price target on Broadcom after upgrading its AI growth thesis. Analysts are getting more conviction that AI demand will show up across chips and infrastructure, not just software.
Exactly. The chain is straightforward. More AI models mean more compute, which means more semiconductors and more demand for characterization and test equipment. Product launches and enterprise partnerships increase the chance of measurable revenue if adoption follows.
So, what really stands out here is how integrated the theme is now. It's not just hype. It's product rollouts and partnerships, moving from R&D to pilots and potentially bookings.
Yeah, and the things to watch are engagement metrics from Meta, order books and deployment announcements from semiconductor tool companies, and follow-up analyst notes or guidance changes from chip suppliers like Broadcom.
Quick reaction. AI shows up everywhere now.
Totally. Moving into payments and private markets, Bank of America unveiled plans for a cross-border real-time payment service. That could be a material product innovation for banks if adoption and pricing work out. And several big banks are spotlighting private companies like SpaceX at events, which can compress private market discounts and amplify interest in pre-IPO names.
Right. Banks are blending product innovation with distribution. That amplifies fee opportunity and can change sentiment toward private assets when they promote them on big stages.
But adoption is key. Cross-border real-time rails are an incremental revenue lever. Adoption, pricing, and competitive responses will determine the magnitude of the impact.
Short thought. Watch rollout metrics for that payment service.
On ETFs and flows, Vanguard launched a U.S. high-yield corporate bond index ETF, and some actively managed ETFs became available on broader platforms like LPL Financial. Meanwhile, the Bitcoin futures ETF traded heavy volume and fell just under 3% on the session. A reminder that macro flows still move ETF-wrapped exposures.
Distribution matters. When new products hit big platforms, advisory flows and liquidity can shift quickly. Analysts will be watching early AUM and spread dynamics for the Vanguard product and volume trends for the Bitcoin futures ETF.
Absolutely. Now for market microstructure. Some microcaps and leveraged ETFs saw huge retail volume. A couple of names had volumes north of 200 million shares and big intraday moves. That's the kind of activity that can create short-lived momentum or sharp reversals.
Quick reaction segment. High retail volume, high volatility. Yep.
In healthcare and ESG news, there were a few notable items. A new all-private room hospital project targeting a 2027 groundbreaking, AI and precision medicine discussions at clinical meetings, and a training designation for radiopharmaceuticals that could boost adoption of oncology suppliers' products. And there's ongoing policy debate over Medicaid work requirements that could affect provider utilization.
So the takeaway there is the timing of revenue from clinical innovation depends on policy and training rollouts. Regulation and authorization can materially shift adoption trajectories.
Right. Pulling back, we saw several patterns today. 1, AI is diffusing from platforms into tools and verticals. 2, policy is reshaping supply chains and favoring certain industrial suppliers. 3, banks continue to drive product innovation while spotlighting private assets. And 4, retail and momentum-driven volume can produce outsized moves in microcaps and leverage products.
And analysts note that when those three things, governance shocks, policy demand shifts, and changing analyst conviction, all happen at once, it can reprice risk premia and reroute flows quickly. So today's moves really reflect that interaction.
Okay, quick checklist of what to watch when the market reopens. Any 8K follow-ups from Verra and comments from Avis. Pentagon procurement timelines and potential awards tied to the 2027 ban. Broadcom-related analyst follow-ups. Meta engagement metrics. Rollout details from Bank of America's payment service. Early AUM and spreads for Vanguard's high-yield ETF. And whether insider sales filings at Coca-Cola become Form 4 confirmations.
Final takeaways. Governance events can produce immediate, sharp repricing. Policy moves can create multi-year tails for specialized suppliers. And AI momentum is showing up across product launches, tooling, and analyst models. Analysts note these are informational signals, not personalized investment advice.
That's an important point. This briefing is for informational purposes only. We are not recommending buying, selling, or holding any security. Use this as context and consult a licensed professional for personal guidance.
If you want to dig deeper, head to stockalpha.ai, where you can ask us directly through the Q&A feature, and we'll answer live. For more market analysis and insights, visit stockalpha.ai and send us your follow-up questions.
Thanks for tuning in. We'll be back after the next session with more color on the filings, contract awards, and AI rollout metrics. Until then, stay curious and stay skeptical. Catch you tomorrow, and remember, if you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.